Hello everyone, and welcome to the new episode of the Learn and Trade with Popeye. Today I'm following up with the request for a video I received a few weeks ago, and I want to talk about trade execution because I think many new traders are having trouble on to physically execute the trade, take the decision to open, to close it, and to manage the trade. And so I'll try to keep it simple with two main strategy, let's say, to execute the trade and to give some practical example. Before moving to the chart, make sure to leave a comment and a like, and I'm sure you are already subscribed to the channel, but if you're not, make sure to subscribe. Also, shout out to the new sponsor for my YouTube page, Blofin. Blofin is a non-KYC exchange, super cool to use. I use a lot in the past, so I'm very happy to partner with them again. You will find the referral link in the description below, so you can join using the link and enjoy a cool discount on trading fees. But without further ado, let's go to see some chart and some explanation behind a trade execution. I want to divide the video into a main category. One is when you take a trade, leaving bids on the order book. So you prepare a trade, a setup, you identify a level that you want to bid, and you put some trade on that level. Let's say on the 4-hour time frame, you saw a bullish market structure to keep it super simple, and you use a strategy, I don't know, with fibs or with demand, with moving average, whatever it is, and you know that when this level is reached, you want to trigger a trade. So you put limit bids on the exchange on this level, for example. You define your stop loss below the latest low. You say you want to aim the high, and this trade is executed, let's say, passively. So you put the bids, you see if the level is tested, you are filled, and then the trade hopefully move on your direction. The other way to trade is to, let's say, wait for further triggers or for further criteria to be met. And this is usually something that you do on low time frame, because you know that if this is the 4-hour time frame, on the 1 hour, the price will move fractally inside this. So you know that probably price is moving, I'm very bad to draw, sorry, is moving bearishly here like this. I'm very bad to draw, so you don't take the trade here, but you take the trade when there is a market structure break of some relevant level. So you say, okay, I'm interested in this level, but I don't want to put blindly some bids here. I want to see when this level is reached and how is the reaction on this level. So in that case, you wait for further trigger. You potentially manually open the trade when you see happening what you want to see happening, but you execute the trade, let's say, more live, more present in the market, and you want to see further criteria to be met when the level you have it's reached. So let's start from the first example that I gave, or the first scenario that I give, the one that you want to place bids on the order book and passively execute this trade with the price action doing this business. For me, this kind of trade is a kind of trade that I regularly take, but this kind of trade need to have some further confluence, because you are not actively managing this sort of trade. So you want to have the level you are bidding as a more confidence, let's say, level, more comfortable level to bid, because you're doing passively. So you are not there to see what can happen, that if that level is visited, is sliced through, and you are immediately stop. And this fine as long as you are following a strategy. So I don't always do exactly the same. It changes, it depends on the context, my feeling, and whatever. But when I place bids like the one in this example, I need to have many confluences on this level that I would like to bid. The confluence are given by mainly two issues. One is technical levels that need to be respected. So for me, I would like to see some confluence on the Fibonacci retracement, for example, that if you follow me, you know I'm usually using them a lot. I like to see also some confluence with demand order block or some consolidation that has happened in this level that gave me a further confidence that this level might potentially. I like to use the point of control of this level as a further confluence. So if this point of control is matching the Fibonacci, is giving me further, let's say, comfort on passively taking this trade. And the second part is that I like to see this level in the past, especially if you are not in price discovery and we have a past price action. I like to see some sort of support as resistance in this level. So it gave me further, let's say, confluence that this is a strong level and is worth to take a bid. Then I'm completely fine once in a while to be stopped, even if you go down. But I know that the level I'm trying to bid is a level that is potentially a level that is gonna be defended. In this case, you can't use momentum indicator, so this you will see will be an important difference with the other strategy, because you are not in front of the chart, for example, to look at volume or to look at RSI, because you cannot use a momentum indicator if you are not there in the moment. So it's a momentum indicator, you need to be there. So this is a first major difference that you will see with this style. If I take quickly to the Bitcoin chart that we have today, I'm recording the video on Sunday, so probably price action will change. If we take this live example here, you will see that if we take the Fibonacci of this extension, if we look, for example, at this previous, we had a support and resistance level just around here. We know that this price action was a consolidating price action, probably starting from here. So I can use the volume profile of this potentially range price action, see where I'm doing it live, and as you can see, I'm starting to have confidence on this level. So we do have the point of control here. Just to make it more visible, we have the Fibonacci level here, and we do have the support resistance level here. So I'm not sure this level will be visited. This is mainly for, let's say, educational purpose. But in case this level is visited, you know that here we have some nice, the confluence of this zone is this support resistance. Let's make it like this, support resistance level. We do have point of control, and we have very close here the 0.75. So what we need further to place and to execute a trade passively with the stinky bits, we need also to have an invalidation. So we know that we want to bid around this level, then we will see about the bid. We need an invalidation that in this case could be this low down here at 98, or could be below the area of interest somewhere in the support of this range, that in this case would be this value area low. Then it change according to your strategy and whatever. I'm trying to give you a rationale. So we know that we want to beat this level because there is confluence of point of control, Fibonacci level, support and resistance, and this consolidation also we had here. Stop loss or invalidation, you can say I want to put it below this low here, below the value area low, or below the low. So when you put the bids, make sure all the time, if you are passively executing a trade like we are discussing now, no need to put all the time a take profit. It can be in your mind, or it can be something that is evolving later on. But if you passively take a trade, you put bids under the book, always put an hard stop loss, because you never know if the price action you are sleeping or whatever happen, instead of doing this, it will do this. So you wake up and you are in a huge trouble. So the second condition of the passive trade execution is always to have a reason to put a reason to invalidate the trade, but to have also an hard stop loss. this kind of execution is more for, in my view, swing trade, so higher time frame, 4 hours, 12 hours daily, because it's very difficult to scalp passively. You need to be there. The second strategy that you can apply when taking this sort of trade is to put multiple bids. What does it mean? That we decided that the area of interest is this gray box, so you can start to layer your order somewhere around this level, this box. So in this case, what you have more flexibility on your entry that can be averaged down. Let me just make it to explain it more clearly. So you don't know, you are not there. We are saying this is a passive way of executing a trade, but in this case, what you have the possibility of being filled even if your level is not completely touched. So if you only put a bid and the price do like this, you will be forthright. So in this case, at least 1/3 you are filled. If all the three level are filled and you move, you have averaged down your entry, and consequentially your risk reward has been improved, because if you can see, the risk reward of this one is 1.8, the risk reward of this is 2.78, and the risk reward of this is 4.4. So if you only put this, it's true you have a very big a better risk reward, but you are more likely to be front run. In this way, you average down your entry, and more or less, if I put this in exact distance, your risk reward will be 2.8 or around 3. So in this way, you are more relaxed. You can also put a wider stop loss that in this case is 7%, in this case is 4%, and you have a more balanced, let's say, trade approach. When I do this kind of trade on the leaving bids passively on the order book, I usually like to layer down my entry. So you have all the time to organize this sort of trade. So I suggest you to do it in this way. So you do get probably a more DCA entry. You can average down your entry and get a more balanced risk reward. And also you can be much more generous on your stop loss, because thanks to the DCA you add in the entries, still you would have a decent risk reward. So to sum up this system, confluence of level, I tell you what is the way I do it, but you can use different strategy. You can put a moving average or Elliott weight or whatever you want. Confluence of level, reasoning to put to have an invalidation and place an hard stop loss. Not possible to use momentum indicator because you are not there in that moment, so momentum not in the moment, and possibility of layering down your entry to have, as explained, DCA and all these other concepts. So this is the first way to execute a trade for, let's say, swing trade, passively managed with the bids. So if you have a job, you are busy, you can trade just a few hours a day, this is exactly a very good strategy to apply, to execute the trade. Then again, I told you the criteria, the logic behind, you can evolve this logic as you prefer. What is important to also put this kind of trade is to have a high time frame bias pretty clear. So while the high time frame bias here was doubtful, let's say, because we are going sideways, in this specific case, as you can see, the bias is still pretty bullish. So your bias is clearly helping you to place trade at around this level, because you see we are also trading a high time frame market structure with higher highs, higher lows, higher highs, and potential higher lows. In this kind of sideways price action, it becomes more difficult to place this kind of passive executed trade, because the bias is more doubtful. So you don't know here what you want to trade. You can do it in a range for sure if the price is ranging, so you can simply short resistance, long support. This would be another strategy. Now, for the sake of the video, we don't do it, but if there is a clear support resistance level in a ranging price action, you can simply try to trade, execute the trade in passively as close as possible to support, using your strategy and way of trading. The other big chapter is the one that we said at the beginning, that is a trade executed upon some sort of triggers. I never speak about confirmation because nothing is confirmed in trading, so we always better to speak about trigger. So in this case, let's take the example of the range to give one. I think many of the charts that I posted today for the week are based on this, let's say, active way of managing the trade. And one example I can give you is on the range, since we mentioned it. So if price comes to the range somehow and start to range here, we have this sort of price action, and then suddenly we do get a deviation below here and price is somewhere here. So in this case, a range trader would potentially be interested on a deviation below the range, a reclaim above range low, a retest, and a move higher. So the trade would look something like this, to make it super simple and straightforward. But since we are below range low, this trade need a trigger to be triggered, so the range is lost. So our assumption is that as long as we don't come back in this range, price is potentially breaking down and going down, down, down. So what we want to see in this wave to trigger the trade, for me, are two concepts. One is to reclaim the range low, so for price to go above it. The second that I usually waiting, I think I posted several charts today, again, today is Sunday, for example, in CRV or other coin, is a low time frame market structure. So if the price action here looks a little bit different, just to make it like, let's say that was the 4-hour price action, and we do have a 1-hour price action that make stupid range as we want, price start to go down like this, so we potentially see the deviation coming into effect. We want to see a market structure break on a lower time frame. If the chart before was the 4-hour, let's say that this is the 1-hour, so what you want to see, you know that this was a range price action. To explain the reasoning, you know this is a downtrending price action, so before entering into action in this one, you would like to see at least a minimal reverse in this price action, so to break an high, move here and go above. So you don't take the trade until price has found acceptance back above range low, for example, and until a lower time frame price action, I usually use the 1-hour, is broken. So this high is broken, potentially with a candle closure above this high. And once this happens, your trade is triggered, you wait for a dip, and then you long. In this case, you can use a momentum indicator because you are there, you are physically there looking at this trade. So what you want to see? You want to see RSI. Potentially, here we are forming lower, lower, lower. You want to see RSI starting to change. So RSI is going down, but then it started to go up. So instead of forming lows, 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 here we form lows, lows, and finally higher low. So here there is a momentum divergency that helps you to see this move. So in this case, the execution is more active. So you are presently there, you want to see a further trigger, and in this case can be the momentum and can also be the market structure break. Another way, for example, of trading, again, this with triggers, is that I usually use the 3 drive. So let's say that the price has gone up like this. We do have a small consolidation here. We start to range. We can say we had a deviation. Now this is not really relevant. First, second, and now we are here. So now you have an order block here. You have 2 lows. You see some potential momentum happening here on the RSI. So already price action was coming down, but in these 2 lows already we had a divergence like this. So your strategy could be potentially to play a 3rd drive down, this one, with a confirm RSI. Now, for the sake of the video, make it simple. So you try to take this third drive down and to trade to the other direction. By the way, you will find a video about trade drive, about range deviation, and about RSI here in the Learn and Trade with the series. So I will not go too much in detail about how to trade this pattern or this momentum indicator. You will find it there, but in this case, why you have to be actively present? Because you want to see the 1, 2, 3 drive, and you want to see that 3 drive is happening with a positive momentum, so with a bullish divergence on RSI. So in this case, again, you have to actively take this trade, and the trigger for you is the third drive with the divergence. To look for some potential, let me clean a little bit and we'll see if we see something in the chart. I think I already saw, just let me keep it clean. Sample was probably down here. If we go to higher time frame, you know that this was a key level. Now it's easy inside, but just to give you an example, physical in the Bitcoin chart, here there is a little consolidation, probably is on the daily. Yes, you can see that in this case was the 3 drive. So we did have 1, 2, 3, and the RSI was potentially with a bullish divergence on the third one. So again, for the sake of the video, support or resistance level, you are interested here. You don't want to beat this level blindly, but you see the price is coming down. You see that the RSI is still positive when we do this sort of testing, and you beat this level. Once you confirm, you actively see that the RSI is still in a bullish momentum. To give you another example of a trade that I took last week, I think was this one. No, that was a bit not the example I want to see. Let me see if I see something. Not really, but I hope the concept is clear. You can see a similar concept here on the 4-hour. So we spoke about the passive way that we can trade Bitcoin. An active way, you can see here again that we have a 2 drive on the 4-hour time frame. Perhaps a trigger can be either break here and longer test, or wait for a third drive here with what? With the bullish RSI. So in this case, these 2 trades would not be trades that you can execute passively as we saw the other setup on Bitcoin, but these are trades that you have to trade actively, execute actively, because the level is interesting. You have your reason to be interested on this zone. So you say, okay, I don't want to passively take this trade. I want to see something happening. For me, my strategy, then you can have yours. The trigger here could be or a 1-hour market structure break, whatever you see this high or this high here, and buy a dip, or wait for a third drive down here with a positive RSI. In this case, you need to be there in the moment to use this momentum concept. I hope it's clear, and I'll try to make a summarize. Just make sure, in case you execute any of this trade, to do it with me on Bluefin. You will find the referral link on the description below to enjoy some cool discount on trading fees and to participate to the many campaigns we run with the team. Bluefin is a non-KYC exchange, so you just need an email address to open an account. You don't need to provide any personal information. It has a lot of liquidity, a lot of pairs. You can use all the leverage you want, and you can simply join Bluefin, clicking the referral link that you will find in the description below. So time to sum up and to try to keep the video not too long. Trade can be executed in 2 ways. The first one is passively, so means putting bids on the order book and let the price action run. What you need to place this passive to execute passively this trade. First, you need to have a very clear bias. So the bias should be clear. Whatever is ranging, trending, or whatever, you are beating a level that is fit your overall high time frame bias. Second, you need to have a confluence of several technical indicators on the levels you want to beat. For me, it's fibs, demand, order block, support and resistance level, point of control, volume profile, and so on. And you need a very clear invalidation because you must place an hard stop loss whenever you are passively executing a trade. When you are actively trading, you can avoid and be there to manage the trade. So once you have all of these, you are ready to passively executing the trade, putting your bids under the book and always put your stop loss at your invalidation level. And the second tips that you can use when passively taking this trade, that as we said are mainly swing trades, is to spread several bids. In that case, you are sure to be filled if the level is slightly touched by the dip, for example, or if you had a deeper correction, you are average down your entry. These trades are recommended for people, for example, that don't have too much time to trade, and they will take less trade, but in this case, let's say, are more high conviction trade because the level are very important. There is a lot of confluence. You are usually using a night time frame that gives more confidence to your trade. The second way to execute a trade is manually, actively. So in that case, you can use same level of confluence, but you want to have further triggers once that level you are monitoring is visiting to actively execute that specific trade. In that case, can be a low time frame price reversal in the form of a market structure break. It can be the use of a momentum indicator like RSI, volume, or whatever you use, and you want to see something happening when the level of interest is visited. In that case, stop loss, other things can be manual because you are physically there. But you need to be more active, more present in the chart because you don't know if that level will be visited when you sleep, when you are at work, or when you are busy. So in case the level is visited, you will need to be there. Probably you will have alarms on that level, and then you will say, okay, I want to see this specific concept to happen. We call it not confirmation triggers, further triggers to activate and execute the trade. I hope the video was clear. Try to let's say make it more short, but especially more organized as possible. There is many other way to execute the trade, so feel free to drop me a comment and question. So in case I can make also a part 2 of this video for more advanced and pro concept on trading execution. As always, if you enjoy this content, make sure to share it on your social, to leave a comment and a like, and to subscribe to the channel. And before leaving, join Bluefin using my referral link so we can trade together and you can enjoy some cool campaigns and trading discount along with me. As always, stay safe up there, take care, and we'll see you in the next video. Bye.